answer session. We've got Marnus Picard in the house. Marnus is going to be talking to us about Impala Platinum. It's a stock that we're going to be covering today. Straight after Marnus's presentation and his update, we're going to go to Sean for the technical bit. And then, as per usual, we'll jump into the Q&A session where we'll try and field as many of your questions as possible. I see the market is flattish today. It's down about 0.25%, with Naspers being down about 1%, Redefine up about 0.5%. So not much happening around the market today, but we're keen to learn from Marnus as far as Impala is concerned. So Marnus, if you'll take it away. Thank you very much for giving us your insights today.
Perfect. Thank you, Soro. Welcome, everyone. We're going to have a look at Impala Platinum on today's call. My name is Marnus Picard, and I cover the resources sector at PSG. In today's call, we'll have a look at PGM price performance versus the gold price over the last year. We'll have a look at the PGM sector price drivers. We'll dive a bit into PGM miners' relative performance for the past year. Impala Platinum is currently maintained as a hold recommendation. It is trading at its intrinsic value. And then the first quarter production report released by Impala Platinum was production volumes decreased by 5%, while tons milled decreased by 6%. Sales volumes decreased by 4.5%, but the guidance remains the same for volumes, costs, and capex for this year. Their half-year results is expected on the 27th of February. And then consensus for the full financial year is for revenue to rise by 4.5%, while earnings per share is to return to a positive state where it was a loss per share recorded in the previous financial year. When we look at platinum, palladium, and rhodium prices over the last year, you'll see that platinum is slightly higher, palladium is more or less flat to slightly down, and then rhodium is slightly up. The spike in the palladium price to $1,200 an ounce in October was when the US asked the G7 countries to increase sanctions on palladium reaching the Russian market. So just the increase on that sanctions, but that news faded away over a two-week period, and then the palladium prices declined back to its previous state and lower. So what's the reasons for the low PGM prices at the moment? It's simply destocking by the automotive industry, and that's due to weaker demand in the internal combustion engines, while there's more battery electrical vehicle growth displaying in some of the markets. Russian PGM metals reaching China, and then higher interest rates. What would cause the platinum, palladium, and rhodium prices to increase? Lower supply forecasted, or increase in demand, a weaker dollar and lower interest rates, and battery electrical vehicles demand weaker than expected, but hybrid vehicles stronger than expected. So just on the lower supply forecast, that's simply mines closing unprofitable shafts and mining operations until price recovers. If we look at the relative performance in commodities, you'll see that gold outperformed over the last year, while copper, platinum, rhodium, and palladium, hugging the zero line, was slightly up, and then iron ore underperforming completely, and that's mostly due to the China construction industry that's a bit in trouble. If we dive a bit deeper into the PGM sector, the largest users of platinum, palladium, and rhodium is the automotive industry. And platinum, it accounts for 40 to 50% of production, palladium 80%, and rhodium 80%. The left chart shows the percentage of sales in cars and what is the sales looking like. So the grey top part is diesel cars, the light grey is petrol cars, green is battery cars, and then the yellow is hybrids. You'll see that the percentage of sales declining in both diesel and petrol cars, with hybrid and battery cars increasing. The chart on the right is number of sales by total number of sales in the world. You see that total number of sales in 2022, 2023 is slightly the same or outperforming since then 2010 to 2023 years. But the number of electrical vehicles as a percentage of sales is increasing quite a bit, which caused the internal combustion engines to be lower. And that is actually now lower than 2010 to 2023, although sales is more. Looking a little bit deeper on the previous numbers, you see that China is the biggest adopter of the battery electrical vehicles, with the green showing the electrical or new type of vehicle sales, that's electric, with gray the internal combustions, that's your normal diesel and petrol cars. The number of electrical cars that's now sold in China is over 50%, with internal combustion engines dropping below that. So it's more sales in the new electrical vehicles than the normal ICE vehicles. The left bottom chart is EU sales for January to September 2023 versus 2024. You see that the adoption of battery vehicles is slightly lower in 2024, but hybrid vehicles increased, with petrol and diesel cars in decline. And just a bit of interesting stat on that is in 2015, diesel vehicles sales were more than 50% of Europe's new car sales. But as you can see, currently that accounts for just over 14% in 2023, and then just a little bit over 12% in 2024. PGM producers versus the basket price. So Impala is the outperformer. It did well last year, while platinum, palladium, rhodium, and the 4E basket price is close to the zero line, slightly up as per the previous chart. And then Sibanye and Anglo American Platinum, that's the underperformance at the moment. Impala Platinum is currently underperforming the benchmark. It did quite well just prior to 2020 to 2022. And then platinum and palladium and rhodium prices started to decline, and so that Impala Platinum. If we have a look at the revenue exposure in 2024 versus 2023, you'll see that rhodium and palladium was quite a big percentage of their revenue, accounting for over 30% in both instances. And that dynamics change now. It's now lower in both instances. That's due to a lower price for rhodium and palladium. If we look at the exposure of revenue for Impala Platinum versus Anglo American Platinum and then Sibanye, Impala Platinum is a pure PGM play. I mean, it's just producing platinum, palladium, rhodium, a bit of nickel, and then other byproducts, where Sibanye has got 27% of its revenue from gold, and Anglo American has got a 3% exposure to gold, but it's also close to a pure platinum play. The valuation currently is a hold recommendation. It's trading at its intrinsic value, with current prices bit suppressed, and most likely to slightly increase hopefully into the future as supply decrease and demand stay stable or increase. But for now, it's just a hold recommendation at the current intrinsic value. That brings me to the end of my presentation. I'll hand over to Sean for the technical analysis.
Yeah, good morning, everybody. Welcome to the presentation today. Yeah, you can see the chart again there. That's Impala until last night's close. You can see the share price is trading below its 20, 50-day and 200-day moving averages. So the medium and long-term trends, I would call them bearish. In the shorter term, the trend has been moving sideways for almost, call it 2 months, moving between a lower support around about the 89.52 level and the upper resistance at 106. In the shorter term, the share price has been testing that lower support trend line, and I said it has bounced off there quite nicely. And as Marna said, now it's obviously, I see it now, it's trading up nearly 3%, so nearly 97 Rand. So it's trading above its intrinsic value, hence our hold recommendation. So on the upside, we could expect that share price to maybe break up above that descending resistance trend line, as well as all those moving averages, to trigger a change in trend. And at the bottom there, you can see the MACD indicator. It is trading at oversold territory and just below its trigger line. So it should give a bullish signal soon. So it's quite optimistic. That's how I see it. Thank you.
Thanks, Sean. Yeah, I don't see a volume spike at the bottom of the chart anywhere near the price action here, except sort of towards the end of the downward trend there, where we had a red candle and a bit of a volume spike. But other than that, there's nothing to suggest that there's enough action here to either get it through the support level, or to actually try and make an attempt to run at that descending line. So for the moment, like Marnus said, unfortunately, it's a sit and wait situation. The thing's trading almost at intrinsic value, and there's nothing on the horizon that we can say is really going to trigger massive demand for platinum. I was quite surprised, Marnus, with the charts that you showed about the adoption of the electrical vehicles, because I don't think us as the general public, I mean, or us as retail investors, see those type of details every day. It's not something that they cover in the news and that they say, oh, there were that many new vehicles sold in that. But they hardly ever tell us what was battery, what was hybrid electrical, and what was petrol and diesel. So I found that quite interesting. If you'll jump back there. So you're saying in China, the adoption is actually quite high, whereas in Europe, it's slightly lower, but still trending up.
Yeah. The thing with China is they gave an incentive. So if you buy a car that's electric or green friendly, then they'll give you, a kickback. So they had quite a big incentive for it as well.
Yeah, flipping. Yeah, I just can't see it working, with our geographical layout.
Yeah.
It's things are far apart. We're so used to driving from Pretoria to Joburg to go and work. And you have to find, and for us to go on holiday, I can't imagine getting into a fully electrical vehicle and stopping and charging overnight and then carrying on with a trip. So
some of these vehicles charge quickly now. The stats are different between cars, but some of these cars charge within an half an hour, and they charge quite a bit. It's like your phone. You can charge the first 50% very quick, and then only it slows down a bit. They're doing the same with this cars. So maybe in the future, I don't know, but the infrastructure is not here. There's no way it can happen now.
Apart from the infrastructure, I think the demand for platinum will stay, because we'll still be buying diesel cars in South Africa for a long, long time. And it's not just the infrastructure, it's the difference in cost as well. I mean, if you look at the Volvo XC90, I think the new price for the petrol model is 1.4 million, and the electrical one's almost 2 million. So you've got a 700,000 price gap to the electrical vehicle to save, and I can't see incentive coming for us to buy electrical vehicles. I mean, they struggled for how long to give us incentive to put solar panels on our roofs.
I agree.
Before they actually did that. But we're digressing. We're talking platinum stocks. There's nothing in the platinum stocks. There's nothing for Impala. I mean, Anglo-Plats, from what you showed, has kind of the same exposure to the platinum group, metals group, throughout their business. The only real different player is Sibanye with their gold exposure.
Yeah.
So not much. Let's see what the audience says, and I'm going to hop into the questions. Let's see. I've got some questions in the chat here. Frederick says, thanks, gents. Your preferred stock between Sibanye and Impala. The one graph showed Impala above the PGM and SSW below. Which graph was that, Marnus?
If you just jump there. Sorry, that's just price performance over last year. It's quite difficult to choose between these two stocks. I mean, if you want a bit of gold exposure, Sibanye is great. They do have a very expensive gold operations. Their all-in sustainable cost is much higher than your pure gold stocks like Gold Fields and Harmony. But it's important to note that Sibanye is trading at a discount because of their current balance sheet. They've got a large number in debt and not cash, where Impala is a bit more the safer PGM play. It's currently got a negative net debt balance, so it means it's got more cash than debt. So if you're looking at the long term and you think that platinum or PGM prices might stay low for a while, Impala can probably wait longer than Sibanye will be able to. The other side is also true. If you get a good price increase here in your PGMs, Sibanye will probably outperform Implats just because it's more leveraged and it will do better in the short term. So it's an outlook issue here. You choose Impala if you want to play it safe. You choose Sibanye if you think PGMs prices will increase significantly in the next year or two.
Thanks, Marnus. That's a very good answer. There's a thumbs up there. Richard comments, and he makes sort of the comment that we made, Marnus. He says, in Europe and the US, they can produce enough electrical power to support the big increase in electrical vehicle sales and obviously put down the infrastructure to support that. Whereas we can't. And then Derek made a comment to say that apparently in China, only 4% of people own cars. So it's a question of context, you know.
Yeah.
It looks like they're selling a lot of electrical vehicles, but there's not a lot of oaks who own vehicles. But then he also makes a comment and says there's still a lot of people there.
Yeah, that's very true. That's a point I wanted to make. They sell, I need to remember exactly, but let's say it's around 20 to 25 million of cars are sold in China. That is about 20% of the world's total car sales. So yes, it is a smaller percentage of people owning cars, but the population is massive. It's a massive population.
Would have been great for Impala if they all bought diesel.
Yeah, exactly.
Not 50% electrical. Okay, let's see if there are any other questions. I don't see any other questions. Just a recap on our previous recommendations. Naspers is down a little bit today, trading at about 3,880. So that's holding to the old recommendation, and then Redefine's trading slightly higher at 442, and we've got an intrinsic value just over $5 there. Dino says, assuming a 17,500 revenue per ounce for platinum and palladium for any combo of USD per ounce and a rand-dollar exchange rate, the current one, I suppose, he says, does Impala make money sitting waiting for platinum prices or platinum group metal prices to rise?
Yes, so actually they are profitable. The problem last year was the impairments that affected the income statement quite a bit, but the cash flow was still positive or close to positive. And we do, at these prices, they can operate. It's impairments that need to be checked, costs need to be checked, and debt needs to be checked. That's why I'm saying Sibanye is riskier when they've got, I need to remember, it's 35 billion rand in debt, where it's a net balance of around 28 billion. And Impala's got a 6 billion rand positive balance in cash after debt. So as long as costs stay in check, impairments are now done, because I mean you'd expect it to be close to done with the price being stable over last year, and low levels of debt, they can return to a profit. Yeah.
Thanks, Marnus. Dino gave you a thumbs up there halfway. I don't see any other questions. Any last questions, guys? Thank you, gents. Interesting numbers. You're welcome, Karina. I have a last question. Sean, what's up next week?
ShopRite.
ShopRite, that's right. Okay, the People's Grocer is back next week. We'll be talking retail next week, so we're talking ShopRite. Marnus, thanks for sharing your insights. Guys, thanks for joining us today, and we look forward to hosting you next week when we're talking about ShopRite. Have a fantastic Thursday. Cheers, guys.